Hey guys, welcome to the Best Bitcoin Data Show. Today I am extremely excited. We have a panel of the smartest MicroStrategy analysts that I've been able to contact and find, and they are very well received and have been putting out fire analytics. Believe me, I've been looking at their things for a whole week and I've been just mind blown. So today we're going to talk about MicroStrategy. This is a stock that has killed it. And this is something that has outperformed everything in the stock market, including NVIDIA. And it has also outperformed Bitcoin since they adopted a Bitcoin treasury strategy. Today, we want to understand the stock. There's a lot of misconceptions because they are kind of appending how the traditional finance works. And this kind of throws out all the traditional analytics and models that you might have been applying to understand equities. So we want to use the knowledge of the panel to update ourselves, understand how to think about MicroStrategy, where is it going, what are the plans, and basically what how valuable the stock is, basically. And this is doubly interesting, of course, for everyone interested in Bitcoin, because this is a company that is, first of all, helping Bitcoin a lot as one of the most prominent figures. Michael Saylor has been a nonstop supporter of Bitcoin everywhere he goes. He just orange pills people, and he's building a strategy based on the pristine, most valuable asset in the world, which is Bitcoin. So with that, I will say let's spend a few minutes talking, introducing the panel. Very brief, but tell us about your work related to Bitcoin and MicroStrategy, and where do you, like, I see a lot of a quarterback and True North mentioned here. So let's begin in order, beginning with Danny. Hey Danny, welcome.
Hey Sina, thanks for having us. I'm Dan Hillary. I'm a graduate student in engineering. I've been in MSTR for about a year now. I've been in Bitcoin for a little over 3, and I think I entered MSTR the same way you're entering in it now. I was curious with the stock's performance and devoted all my time to learning more about it. So that took me to where I am now, and it's all thanks to these guys, RY, Quant, and Punter Jeff. So looking forward to hearing from them.
Right on. Excellent. My name is Jeff Walton. I've got over a decade of working in traditional finance world. I'm a reinsurance broker by day. So I am selling insurance to I'm selling reinsurance to insurance companies to offset volatility of balance sheets. So I've got a unique perspective of the capital world and how, traditional finance views, interest rates and how capital moves from a larger perspective. So that's kind of my finance background, business and economics, education. And then I've been in MicroStrategy for about 4 years now. Started investing back in 2020 when they had put Bitcoin on their balance sheet. Been in Bitcoin about the same amount of time. And I've got a really unique perspective at valuing and putting a number on MicroStrategy. And I think it is the most compelling story on all of Wall Street right now. And I think it will be the most compelling story on all of Wall Street for the next decade, 10, 20 years. So very timely conversation. We love talking about it. I think it's a very interesting equity to discuss. Kick it over to Ryan.
Yeah, I guess it's my turn. So hi, friends. My name is Ryan. I like long walks on the beach. I like studying dominant technology monopolies, especially if I can find them at $1 billion after FTX blows up and nobody understands it because it was trading below book value. Nobody talks about that now. Everyone only wants to talk about their perception of it being too high, but not a person was talking about it when it's too low. The other thing I like is applying leverage on these positions by means of long-dated, deep, out-of-the-money calls. And I do that by studying Vega specifically.
And I think one other thing to point out, all of us, me, Danny, Ryan, we have this MSTR True North in our little subject line here. This is our kind of in super group investment club. We have videos that we put out every Wednesday. They might be every Monday, every Wednesday. And we talk about MicroStrategy, and that's all we talk about. You know, what's the cutting edge? What do people care about? What's going on with the narrative throughout the market? So
how does Quant Bros link to this?
Yeah, Quant Bros was a little project that Ryan and I started back in February of this year, just putting out some content on MicroStrategy and reviewing reviewing the equity and putting a valuation concept behind MicroStrategy when things were in the doldrums of the ETF approval back in January, February. So that was kind of what spurred this whole thing. And then we built a little community of incredibly bright, talented people that are also reviewing the MicroStrategy trade. So that's the MicroStrategy True North is the culmination of that group of really, really talented people.
I was going to say it's the same thing. It's just grown into more people, but it's
Quant Bros.
We're all Quant Bros. It's the same thing. Yeah.
Awesome. So also let's very briefly, because we've done this a million times, introduce Plan C and Sminson and myself quickly. I'm a co-founder of 21st Capital. I'm a business professor, background in economics and supply chain and operations. And been in Bitcoin. Started with Bitcoin about 9-10 years ago through the route of research, and then a few years later became extremely obsessed with it. Devoted pretty much a huge amount, like more than half of my time to it, and then graduated to a professional level with our company and all. We provide advising and custody services. Plan C.
Yeah, hey guys. Been in Bitcoin. Been I guess crypto. I did mess around initially with shitcoins. Going through that learning curve in basically early 2018. Went all in on Bitcoin during the COVID crash, and just kind of held everything ever since. Focused on really long-term, growth patterns around Bitcoin, modeling it, and I've been studying like on-chain data for the last 4 years, pretty in depth. And pretty obsessed and full-time with just trying to analyze Bitcoin on higher time frames, but absolutely interested in learning about MicroStrategy. I don't hold a position currently, but definitely wish I did. Obviously everyone does now. I mean, it's performed so well. So definitely props to these guys for being some of the earliest guys in. MicroStrategy I look at as an ally, and I'm happy to learn a lot more about it.
Hey there, Sminston with here. I'm back here with these guys after having a brief, more than brief getaway in a mountain vision quest of sorts. So I'm happy to be back with the best Bitcoin data crew here. I got interested in Bitcoin right around the 2020, 2021 cycle at peak. And so I'm coming up on being a complete first cycler, hopefully. I do have a small position in MicroStrategy and becoming ever more interested in that side of things myself. And when I saw that we were going to be lining up this amazing MicroStrategy analyst panel, I was totally thrilled to have an educational course going on in here when I, first thing coming back. And so I'm very excited myself. Also having an engineering background, like Danny is doing an engineering program there. So definitely feel some kinship there. But I'm excited really to just learn a lot from these folks, taking notes, enjoy the discussion, because I'm by no means a MicroStrategy expert, I would say, and I'm just want to learn more about the price dynamics, the fundamentals, where we think it's going. So thank you guys all for being here. This is really exciting for me.
Awesome. So we've got 2,000 people watching live, and it's exploding. But that number is through all the platforms. So just aggregate. Okay, so let's begin. My first question to the panel is, what is a bull case for MicroStrategy? Very broad question, but I think that would lay the foundation. Anyone who likes, pick it up.
Yeah, I'll start. Yeah, I'll start. I guess general bull case for MicroStrategy. Their current market cap is somewhere around $47 billion. They own 252,000 Bitcoin. The next closest company that holds Bitcoin has roughly, I want to say 23,000 Bitcoin or something like that, and that's Mara, the mining company. So when you compare how much of a lead MicroStrategy has relative to other companies in the entire equity market, they have more than 10 times the next closest company Bitcoin holdings. They also have more than 2.5 times more Bitcoin on their balance sheet than all publicly traded equities combined. So to me, the bull case is looking at their Bitcoin holdings as a technological advantage and a significant moat. Because if another publicly traded company were to try to catch Bitcoin's or MicroStrategy's Bitcoin holdings, they would have to spend a significant amount of money in order to catch them. So MicroStrategy's 252,000 Bitcoin, I think, is worth around $17 billion right now. I estimate that if a company were to try to catch them from zero, say like Apple or Meta or some other company like that, they would have to expend probably anywhere between 45 and maybe $60 billion in order to catch them at 252,000 Bitcoin, because the price would start to run away. Now, if you start to think about how many of those companies could potentially actually catch them, who has the cash, who has the balance sheet to do it? There are roughly 8 to 10 publicly traded companies in the entire stock market that have more than $40 billion of cash on hand. And of those 8 to 10 companies, there's only one that has a sole leader that's got more than 50% of the voting rights that would be able to overrule the board of directors and start buying Bitcoin with their cash on hand. And that company is Meta. So Meta has roughly $58 billion of cash, and they could theoretically, with the direction of Mark Zuckerberg, buy Bitcoin to put it on their balance sheet to potentially compete with MicroStrategy. Now, the unique component here is Meta also has their existing business. So the stock wouldn't necessarily trade as volatile as MicroStrategy would trade, and MicroStrategy still would serve a unique position within the market, offering these convertible debt issuances, which is effectively a Bitcoin-backed bond. So long story short, I think they have a significant technological moat, and they are, in my opinion, likely to be one of the top-rated public entities in the entire stock market in short order. And I don't think there's any other company in the stock market that could potentially catch them.
Yeah, I agree with that, and I'd add that the fact that they own all this Bitcoin and the reason they're so valuable isn't because the Bitcoin's only going to appreciate in value, and the Bitcoin will appreciate in value, but the Bitcoin itself, the fact that they have such a moat, such a large portion of their market capitalization is made up of this Bitcoin, means they can offer products to the market in ways that other equities wouldn't be able to. If Bitcoin made up 10% of the overall capitalization of a company like Meta, they couldn't offer these convertible backed bonds, which actually increase the number of Bitcoins that MicroStrategy holds or that a company holds, simply because Meta's volatility wouldn't be as high as that of MicroStrategy, considering such a large percentage of their market cap is made up of Bitcoin, which is a highly volatile asset. So as their Bitcoin holdings increase and as they become a larger and larger kind of Bitcoin leveraged proxy, that volatility continues to pay dividends in the form of Bitcoin per share, which is something that even a company that enters and tries to buy Bitcoin won't be able to recreate until they get enough Bitcoin such that it's a large portion of their market cap. So that's kind of the monopolistic tendency.
Fantastic.
Can I just fill in the gaps? I mean, really not much else has to be said after what they did. So I got 3 quick points here. Number one, back to the this idea of could someone else or will someone else catch MicroStrategy in total Bitcoin holdings? The thing that Meta, and Jeff, we'll talk more about this offline, but I think Dell could also, and not as quickly as Meta, but with aggressive convertible bonds, could surpass MicroStrategy. but neither Dell nor Meta will ever be able to emulate the MicroStrategy as a trading vehicle, volatility is the product type instrument, because the overwhelming majority of both Meta or Dell's market cap would be through the earnings power and buybacks of like the real business. So that's point number one. Point number two, the like recent aha light bulb going off moment for me, and why I'm saying like it's over, is because like it's now like fully finally clicked that MicroStrategy is like the team literally are the financial engineers that are operating in between Bitcoin and all of the TradFi markets, equity markets, bond markets, volatility markets, especially in the options market. And then you can create products like MSTY to just sell that covered call strategy. So I think that cannot be, it's not possible to overemphasize that, because here's the reality. Nobody actually cares about IBIT. And this is going to be a great segue into my last point here. Nobody actually cares about IBIT. There is no groups of people forming around to spend like full-time working hours on IBIT. Nobody cares about Larry Fink. I'm sorry. Like there is going to be no Elon Musk type phenomena with Larry Fink. However, to me, from my perspective, being like a veteran of Tesla and seeing that whole story through for 7 years, there absolutely is a Sailor type Elon Musk, Steve Jobs type premium that should be associated like to this company. I've seen it. This is it. Like I'm telling you, this is it with the Sailor Elon comparison. And then you factor in like the rest of the team. And this is what I've been talking about a lot recently, that 10-person capital markets team, plus the people who are running the software business. Like it's A players all over the place. So I think those are just my 3 points. But I think that 3-person segment really covers a lot. Maybe not 100%. We have to bring Ben and some other people in for convertible bonds and many other people to like really get to 100%, but that was a good chunk of it.
Yeah, I think I'd like to also zoom out a little bit and think about the forest from the trees on like equities themselves, because I think something that a large part of the Bitcoin community doesn't necessarily understand is that MicroStrategy is an equity and it's not a commodity. And I think that's a big distinguishing factor, right? These are 2 different products. Like Bitcoin is a commodity. MicroStrategy is a company that offers equity that has Bitcoin as their treasury. Those are 2 fundamentally different things. And in order to understand MicroStrategy, you have to have a fundamental understanding of what is Bitcoin and what is Bitcoin's bull case, right? Bitcoin's bull case is many things. It's digital capital. It's the best collateral on the planet. It's potentially a medium of exchange. It's a store of value. It's all of these things. You have to have an understanding of all of those components in order to understand what MicroStrategy could potentially do with it. And as a company, you start to think about how all equities are priced, and try to compare how all equities are priced relative to MicroStrategy. And one interesting component of the equity market and how the equity market works is that there are market cap weighted index funds. A majority of the market of the money that comes into the stock market every day, every week, every month is market cap weighted index ETFs. So we're talking S&P 500, we're talking QQQ, we're talking VTI, we're total stock market index funds. Pension funds, banks, insurance companies are all taking money in the door, and they're buying these market cap weighted index funds for a point in time in the future. Now, the reason I bring that up is this is incredibly important, and the structure and the design of the equity market adds more fuel to the fire here. So a market cap weighted index fund means that as the market cap of the equity rises, any new dollars that come in the door, that allocation of new dollars that come in the door increases exponentially. It's not linear, it's exponential. And so as companies rise in market cap quickly, they see this reflexive component of new dollars coming in the door exponentially that don't care about any of the metrics, right? They don't care about any valuation metrics. They don't care about mNAV. They don't care about anything that's going on, because it's these agnostic buyers that are purchasing the index ETFs, and those dollars are flowing to the equity regardless of price. And this is something that Bitcoin doesn't have currently, right? Bitcoin isn't included in the S&P 500. Bitcoin isn't included in the total stock market index. Bitcoin isn't included in the Russell 1000. It's not included in all of these index ETFs. And that's something where MicroStrategy, in my opinion, will continue to have this high valuation that will be difficult to rationalize because of its inclusion in all of these large market cap weighted index funds and its continued performance. As the underlying Bitcoin increases, they're going to get exponentially more dollars from these passive market cap weighted index funds.
Well, and Jeff, isn't that kind of plays to your point about reflexivity, and you say this as well, Ryan, but like as that market cap continues to expand, as the market cap continues to increase as a result of passive flows from index inclusion, then the mNAV will continue to expand. And as that mNAV continues to expand, it increases MicroStrategy's ability to purchase Bitcoin with a single at-the-money purchase, at-the-money share selling into the market. I actually have a quick little slide that illustrates how MicroStrategy can sell shares into the market and increase the number of Bitcoin that shareholders have per share. And it's just a little bit of math. Let me pull it up if that's all right.
Yeah, go for it. Let's see it.
Yeah, is this good? Is this good flow? I think doing a little overview and then maybe jump it. We could talk about mNAV. I mean, while Dan's pulling that up, for those that are listening that may not have an understanding of what mNAV is, it's this concept that has become a little bit of a point of debate within the community. Is this multiple on net asset value? MicroStrategy holds Bitcoin. Their Bitcoin that they're holding is worth something around $17 billion as of today. And the company's market cap is trading around $45 billion. So you can think about that as about a 2.8% multiple on net asset value. The calculation, you should take the assets minus the debt, and that gives you this multiple number, the market cap divided by the asset value. So there's some contention within the community that says if you're buying MicroStrategy today at $46 billion, you're buying Bitcoin at $200,000, which I think is an inappropriate way to look at this, because an equity is different than the commodity. And if you have an understanding of the design of the equity market, you can, all stocks in the entire market are forward looking. The question is, how forward looking are they? So, right, like people say Nvidia or Apple or Microsoft trading at 30 times PE ratio, trading at 60 times price to book value. All of these stocks are forward looking for value at some point in the future. And if you take that same concept with MicroStrategy and you think Bitcoin is going to $1 million or $10 million or $13 million, I wouldn't be surprised if the market starts to price in a Bitcoin price that's significantly higher than what it is right now. And again, this is putting a narrative, a framework around the pressure that the market is seeing.
And didn't you just make a post about that, Sina? Oh, go ahead, Ryan.
Yes.
No, I just had
Yes.
So like we don't have to discuss this right now, but yeah, my one of my main questions I had for you guys was kind of like, and we can revisit this throughout the conversation, but maybe your top 3 or top 5, kind of like big picture, reasons for the delta, right, between obviously the Bitcoin holdings and the valuation, and the things that come to mind for me, obviously besides the Bitcoin holdings would be, a monopoly on the marketplace of the commodity of Bitcoin, the digital commodity. So they have a monopoly on a marketplace, and a marketplace. You have to be able to put a valuation on a marketplace because, like you guys have talked about a lot on shows I watch, you know, just the amount of volume and the amount of speculation, you know, just all the options, everything that's going on around MicroStrategy, it's becoming like its own marketplace. So they have a monopoly on that. But then obviously it goes well beyond that, right? With potential, digital bank of the future, whatever you want to call whatever these visions Michael Saylor has. So there's multiple things there, but I'm wondering what you guys would rank as your kind of top three. I mean, some of them might be more short term, some of them might be more long term, but there's specific big picture things I think that would justify that delta. But I'd like to know you guys maybe top three or top five if you guys want to share that, because I think that'd be interesting.
Go ahead, Ryan.
Yeah, here's the one. You only need one. You're either going to get it or you're not going to get it. I mean, we've laid out the case. We talk about like the major catalysts in near term, medium term, long term. You're either going to understand that there is a monster reflexive trend here between both Bitcoin and MicroStrategy. The software business is good enough, not great, good enough to be well entrenched across thousands of customers globally and every type of customer imaginable: private companies, public companies, governments, universities, departments of defense, hospitals, you name it. MicroStrategy one's probably there in some capacity. Like we've potentially got so many forced buyers at any price. And again, people have the absolute nerve to keep coming back to this idea of premium. Where were all the smart money analysts when I was posting and asking Mark Harvey, like, wow, this almost seems crazy. Like, MicroStrategy's market cap is below the value of its Bitcoin holdings, meaning the software business is not only free, it's a negative value. If God forbid I throw a 1x price to book on there, then the software business is negative value. Not a single other person was talking about this stuff. Nobody.
It's so crazy to look back and to see that the charts, because I've gone back and looked at it now in retrospect. I wasn't paying enough attention, but man, to see it trade below book value, like that's just crazy. Like what an opportunity that was, obviously in retrospect. But I am curious though, like if you guys don't mind, I mean, you guys are all long-term investors, I'm assuming. So maybe over the next 10 years, would you rank maybe just like your top three, because this will help maybe for the audience to understand, like there are at least three major, and I'm not talking about like minor things, S&P inclusion, however you want to rank these top three. I'd be interested in your guys' perspective.
Yeah, I'm going to take one. Is where is there a better opportunity cost of capital? And I think that is kind of at the forefront here, right? Like if you already hold Bitcoin, and let's just say you have trapped capital in tax advantaged accounts or whatever. It's funny. I've seen this trade where people are selling MicroStrategy to buy Bitcoin, which I think is just kind of funny to me, because you're selling the thing to buy the thing that makes the thing you just sold more valuable. It's kind of this silly, cycle. But on top of that, it's the fact that they are included in index weighted ETFs. I mean, the possibility that they get added into the S&P 500 is just jet fuel, right? Like even if they didn't get added to the S&P 500 for whatever political reason, X, Y, or Z, they are ranked the 210th largest company as of today. So they do belong in the S&P 500 once their earnings flip positive after they adopt the new accounting rules in 2025 coming up. But the fact that they are included in market cap weighted index funds already, Russell 1000, total stock market index, they're in technology ETFs, they're in over 200 ETFs that are market cap weighted. So as the value of the Bitcoin goes up, you're going to have these price agnostic buyers that are jumping in no matter what the price is. So it's really the design of the market that is incredibly appealing. And I think any conversation on valuation today is silly until they get to the top 10 publicly traded companies, at which point you could start to say, okay, yeah, should you know, should MicroStrategy be worth more than Apple, or should MicroStrategy be worth more than Nvidia? And that's where I think that conversation starts to carry a lot more weight.
Okay. Perfect. Great idea so far. But I don't want to miss on Danny's comments. So we wanted to continue. Yeah, because he's been pulling up his. I think did you? Yeah, it's. I don't see your shared screen anymore though. If you want to pull it up, Danny. So the idea was. I think the critical thing was how should we think about the asset holdings of MicroStrategy versus the market cap, right?
Sure, yeah. And I'll actually respond to that by answering the question Clancy asked. So I think my top three are, is one, MicroStrategy, when it was trading at a 1x book to value or market cap to book ratio, they were able to introduce leverage in the form of debt. And they created a leveraged Bitcoin proxy product, which anyone bullish on Bitcoin over a long time horizon would put a premium on that, right? Leveraged Bitcoin. If you're bullish on Bitcoin, there's a justifiable premium to leverage. That allowed for this small mNAV or this multiple to net asset value, which allows MicroStrategy to increase their Bitcoin per share or just their Bitcoin holdings in general at a very fast rate. So the only way you can do that is if you have a company where the market cap is largely made up by their Bitcoin holdings, right? And then finally, this volatility via a leveraged Bitcoin product allowed for their own sale of this convertible debt. And this convertible debt or fixed income products that are backed by Bitcoin, that are secured by their Bitcoin holdings, is highly advantageous in the product that they're delivering to the market because they're able to strip away some of the risk for investors of these fixed income products, which ultimately is returned to MicroStrategy in increased Bitcoin holdings. So they're giving investors volatility, they're giving investors these Bitcoin proxy products, and they're returning Bitcoin to their shareholders and Bitcoin to the company, which is taking on this massive volatility and just pumping the demand even more. So that was kind of my point there. But this slide is attempting to illustrate how the premium itself allows an increase in Bitcoin. And so I don't want to get over my skis too much here, but just for reference, anyone who's thinking, okay, how does this mNAV allow for increased Bitcoin per share? Well, these are simple numbers. So MicroStrategy is trading, if they're trading at a 2x premium, that is their market cap divided by their total assets, they're able to sell 5% of their shares into the market and increase the number of Bitcoin per share by 5% due to this multiple to their asset holdings. Similarly, if there's a 3x mNAV, they're able to increase their Bitcoin per share by 10%. And I know that's kind of in the weeds, but the point here is that this mNAV, it's kind of like a bicycle wheel. Once you get it spinning, right? Once you add leverage to Bitcoin, there's a small premium. Once that premium is generated, MSTR can increase their Bitcoin, which kind of justifies even more of a premium. So as you can see here, as the market cap goes higher, and as Jeff is saying, as passive indexes are pumping money into the market cap as well, this premium continues to expand and continues to benefit this operating company simply because it's an operating company and has all these opportunities to sell shares and sell fixed income.
Hey, guys, as an analogy, just so people could understand like what this is actually equivalent to, what would that be the equivalent of a miner mining Bitcoin for? Because in a way, that's what MicroStrategy is doing. By selling those shares, what is the actual equivalent of like their cost basis on mining Bitcoin, essentially with no overhead?
There is no comparison. There is no conceivable on planet Earth comparison between MicroStrategy and the miners. We hold on. We can speculate on this idea, but that idea,
an analogy. I'm not saying it's the equivalent of, but I am obviously there's no miner that has no overhead, right? So it's not. I'm not trying to say MicroStrategy is like a miner because I think miners are dogs. But
well, I was. Thank you. Okay.
I don't hold any mining. I looked into mining. I think it's a really bad investment unless you got an extremely early last cycle and you got lucky and just happened to pick the winner. But I'm not saying MicroStrategy is anything comparable to a miner. But I do think like if you're able to mine Bitcoin right now at a crazy low level with no overhead, I mean that shows how much better it would be than the mining category. Is my point.
I agree. I think it's
if you guys don't want to
compare
compare to that. That's
it's
fine.
the cost of operations. It's the cost to run MicroStrategy as a company. Because as long as they can sell shares into the open market with a premium to their book value, they're increasing the number of Bitcoins they hold per share.
Because
That's,
if it's a 3, yeah, I mean, if there's a 3 on the NAV, right, that would be like mining Bitcoin at a third of the cost of the current market cost with no overhead, right? That's just destroying any miner.
Correct.
It's not even like that. So it'd be like mining. So if the NAV's at say 2, you're mining Bitcoin right now at 35,000, and that's all in cost. There's no other miner on the planet that I'm aware of that's doing that, unless they're like government subsidized or something.
Yeah, I think that is an analogous way to think about it. You can also think about their interest expense on any of the convertible debt as their kind of cost for acquisition on additional Bitcoin as well. Yeah. Interesting concept. I want to hit on one more thing and Plan C. That this is kind of going back to your question as well, and thinking about, you know, what are the top 3 things, right? Opportunity cost of capital, leverage on Bitcoin, as Dan pointed out. And then 3 is Bitcoin is collateral. This is permanent capital, right? The 252,000 Bitcoin is permanent capital that can be used at a point in time as collateral in the future. And that's the whole concept. Like, an entire economy can be built on Bitcoin, and they don't have to sell any Bitcoin in order to do that or to facilitate that infrastructure. And there is 10 years from now, 15 years from now, when the amount of Bitcoin that's been mined is over 99%, we're going to be seeing products that we can't even conceptualize today, because the world's going to look a lot different 10 years from now. But I can foresee a situation where that Bitcoin is used as collateral to generate an additional yield on top of that, where they are continuing to mine fiat in different formats at some point in the future, whether that be lending, whether that be insurance, whether that be dark pools, whether that be like liquidity and exchanges. It could be a whole host of things that we don't even know exist right now. So this is like comparing MicroStrategy to Amazon in like 2004, where Amazon's got this bustling, online book retailer. And you know that they're going to be able to do something with all this data and infrastructure. And, 20 years later, they're now a global internet distribution behemoth and the largest cloud computing platform in the world, right? Like, if you held Amazon since 2002 or 2006, you did really, really well. And I think this is a very similar situation where that the Bitcoin is incredibly valuable, and it's going to be incredibly valuable 10 years from now. And what they're going to be able to build on that is going to be pretty impressive, I think.
Fantastic. Something I'll mention is, if you think in traditional terms and not even include the possibility of an investor to adopt Bitcoin just the way a TradFi person thinks about an equity, what you can do is some kids analytics. As I understand, that's the way.
Kid analyst.
Yes. So what I've done here is I just take only the net assets that they have currently. So I've excluded the possibility of adding more, and then I'll talk about that later. If you just extrapolate how much this Bitcoin is going to be worth 20 years from now, 21 years, all the way to 2045. And then don't think about the nominal value then, because there's time value of money, right? So we discount all these asset values back to the present value using a 5% risk-free rate that a bondholder or someone similar might think about. If you do that, today's value of MicroStrategy approaches $1 trillion. And that is about 20x the current market cap. And if you compare that to today's assets held, that gives you 50 to 100 multiple. But the next thing I was thinking about, because over the weekend as I was preparing for this, I was very, very much considering how should I understand this asset versus the Bitcoin that I have, right? So then to me, the question, because I'm nearly 100% in Bitcoin. To me, the question is, do I want, it's not like that I can sell bonds or anything, right? But then will this asset outperform Bitcoin? That's the most interesting thing for a person like me. Now, for that, my Bitcoin also grows very, very fast, right? So I have to think a little bit differently here. And that kind of thinking also got me to some interesting rabbit holes. So just to give the audience a little bit of perspective here, we like to use the power law model a lot because it just fits the data the best. And this is the equation you get out of it, 96% R square fit and so on. And this is how it fits very well going through the average of the data. Huge caveat, past performance doesn't mean future performance, but we have talked ad nauseum about this and kind of tested the model, stress tested the model. Like, for example, we went back 4 years and built a model then and extrapolated it to today. And you see how accurately this thing does it. You do this with any other model, it just breaks miserably. So this gives me a little bit of confidence that this trend is likely to go on into the future. All this does to me, it gives me a base model, just a base model, to project future value of Bitcoin, and that's what we did for predicting this. But to quote Damodaran, the reference on equity valuation, New York University, valuation doesn't mean anything. It's basically narratives. However, valuation gives you a life raft, right? If everything just explodes and hell breaks, valuation is something you can think of. But the market is for a long time can trade independent of that. So, so that thinking then brings me to this BTC yield concept, because I will only gain anything on top of my Bitcoin if MicroStrategy allows me to have more Bitcoin. And again, also the multiple will also expand as the market learns about it, because there's huge inefficiency in TradFi, as you guys all aptly mentioned. Lots of money that's ready to come in, and they can leverage and they can get yield and so on. But just to simplify this, just assume MicroStrategy can do nothing except generate some yield under Bitcoin, which is absolutely fair. It's a lot of capital sitting there, not being productive. There is a million ways finance can, put that to use, generate some yield. Let's say that yield is conservatively 5%, or maybe that's actually not a bad number, but many other platforms have been generating a lot more yields. But 5%, if only that happens for the next 21 years, 5% addition that the Bitcoin and Treasury creates ends up tripling the initial value. So 20 years from now, the same Bitcoin accumulated, kind of getting a yield of 5% every year, is going to triple. So that already tells me that a multiple of 3 is totally fair here. Then you add every other thing, like the ability to get extremely cheap leverage, buy Bitcoin, increase the Bitcoin more. So maybe actually a 10% Bitcoin yield is more fair, or more kind of a better case. Then you think about all the inefficiencies of TradFi, all the FOMO, all the flywheel, all the excitement that will be generated around this firm, plus the value of human capital that you guys were talking about, right? All that will support the mNAV to be significantly higher than that minimum of 3 that we started with. So that gives me confidence. I mean, I was extremely skeptical of. I was just starting at 1 thing, initially thinking, as Jeff was saying, why would I pay more for the Bitcoin? But then I quickly realized, exactly like you said, you're not buying an ETF. This doesn't entitle you to a specific fixed amount of Bitcoin. Like $1 you put in MicroStrategy you get a portion of the equity. You get a portion of everything that they own today and in the future. It's not like only today, right? What's going to happen in future is all that compounding, right? All that expansion of the Bitcoin that they have, which will just make you stronger and make your holdings more valuable. So that's the way to think about this, right? Go ahead, Danny.
Yeah, I completely agree. And if you model out their 21-21 or 42 plan, where in their earnings they talked about how many billions of dollars they're going to put towards share selling to buy Bitcoin and convertible debt to buy Bitcoin. If you just use the average Bitcoin power law price over the next 3 years and a multiple to net asset value that's like roughly 3 or 4, they're going to double their Bitcoin holdings a lot sooner than people think. It looks like they could double their Bitcoin holdings in 3 years based on this plan, quite easily. And so I think it's something that people need to think about when thinking about this net asset value premium. And that's actually, it's arguably conservative because they've outperformed their Bitcoin yield, I think every single quarter since 2022. They had like a down quarter.
Yeah, and that slide that you just showed there, that was from the Q3 earnings call. And I encourage everybody on this call to go watch the Q3 earnings call. I think this is equivalent to Michael Jordan in his prime. Like, this was probably one of the best earnings calls, corporate earnings calls in all of financial history. I think it will be taught over time. So this is really appealing here because there's two things going on. They're looking to raise $21 billion via at the market equity offering, and then $21 billion via convertible debt issuance. So that gets us to the $42 billion figure. They plan to do that on a tiered basis over the next 3 years between 25 to 27. And I think this is incredibly appealing for the financial markets, right? If you were a corporation and you were concerned about adding Bitcoin to your balance sheet, well, guess what? You just got air cover. You got $42 billion of exit liquidity if you ever wanted to exit your Bitcoin trade. And this transparency from Saylor is completely necessary for facilitating corporate adoption from a widespread perspective. Obviously, there are some other hurdles that the market's got to get over with the accounting. You know, MicroStrategy is going to release the FASB fair value accounting in Q1 of 2025. I think largely the entire market is missing the impact of the accounting. And then if we get bank custody, institutional bank custody, we will see continued adoption from these large corporations that are going to add Bitcoin to their balance sheet to protect assets into the future.
And they have this plan, right? So there's going to be, actually next year is going to be moving slower than, you guys hear me, right?
Yeah.
And then, so $10 billion, right? And the next year, 2025, 14 billion then, 18 after that. And maybe this is a great segue to this one. What do you guys think? How do you guys think this will impact a company like this? Market cap is at 47 billion or something right now, and they're raising like 80-90% of the whole doubling.
Yeah. It's a great question, right? But it's interesting if you look back. So August 1st, MicroStrategy released a $2 billion at the market equity offering. The price of MicroStrategy at the time was $153, and I think as of today we're trading at $230. So the market is telling you that there's demand there, right? So it's a crazy situation in which typically this would be dilutive, right? If selling shares at the market would be dilutive, but it's not dilutive, it's accretive. There's never been a situation like this in all of corporate financial history where they're actually adding more, they're adding more value by diluting or accreting to the shareholders. And over that time period as well, from August to now, the mNAV that people watch has actually gone up. It's increased, and I feel like that argument should blow up the mNAV debate completely, right? Like you just added $2 billion of liquidity on the market, and the net asset value went up. So, and if we think about index inclusion on the horizon too, so we've got QQQ potential inclusion. That's the NASDAQ 100. That's the 5th largest index ETF in the world. That inclusion happens in December. We'll find out on December 13th if they get included, and the rank day will be November 29th. And then increased weighting in the Russell 1000. That'll happen next April. MSCI Total World Index, that happens on November 26th. A rebalancing, and their market cap is significantly higher today than it was on the last rebalance. And then the S&P 500, which would likely happen at some point in 2025, which represents three of the top 5 largest index ETFs in the world. So significant amount of potential buy side volume and liquidity that could be added to MicroStrategy to facilitate additional ATM offerings. So I don't think the 5 billion is crazy by any means. I think just in this last year in 24, they did the $2 billion offering, and then the end of 23, I think there was another $500 million offering. I think they can handle it.
All right. So 7,500 live viewers, guys. There is a very good question, very relevant to what Jeff was saying, right? How does it add value by issuing more shares? Why is it not dilutive? Not understanding the idea. So Dan and Ryan has been wanting to add something for a while.
Yeah, jump in, Ryan.
I can answer this question and just roll into my points if that's cool. How does it add more value? I think Saylor said it best, I don't know, a month, 6 weeks ago on CNBC when he said, our shareholders want more Bitcoin per share. I would like to take it one step further. I want more Bitcoin, period. I'm so okay with just to give you a personal example, nothing I say is financial advice, but I hope they dilute harder. And I'm using that word. I know it's a dirty word to prove the point that I want more Bitcoin. One of the things Plan C talked about a little while back was what's a long-term catalyst. There is no theoretical mathematical limit to how high Bitcoin per share can go if and when MicroStrategy was to start doing buybacks, because the combination of splits and buybacks means that it would be physically impossible for any one entity to buy all of the shares. And there's a lot of buyers. The indexes, me, Jeff, Dan, all the retail people, institutions, high net worth, central banks. There's all these players. So if you just keep buying back and splitting the stock a la Apple, it's impossible for any one person to get all of them. So that trend, there is no limit to that. That's one thing. I think we're making a lot of progress though, because we're getting away from this whole linear thinking concept, right? We're talking about valuation in the sense of let's try and find a range or hopefully a floor or something like that. But I think we've all been through a number of cycles now and studied asset price movements and a little bit of Soros and Druckenmiller. Things move in such a non-linear fashion. But I think MicroStrategy is going to move in such a way where it looks like Apple on an all-time chart with a long period of flatness, multi-decade long period of flatness. And then when was the right time to sell? I don't know. I don't think there ever was one. I wanted to reference what F&T, I saw it up on the bottom line chat. And again, back to nonlinear thinking. Saylor, in no uncertain terms, referenced the idea of a 30 to 50x mNAV by laying out a compelling case. I wish I knew the whole thing about the percentages. He's putting it up again. It's 30 to 50x was the case that he made based off the growth rate of Bitcoin as it pertains to a growth company. I thought that was obviously a very compelling case. And then if people can see my screen here, can you see this little Kaggle calculator? What I want to do here was to one of the charts Sina had shared a little while ago about the 47 billion to a trillion. I think it's much higher than that, looking at the Kaggle numbers, because here's the other thing. This is the market cap number. This is not the stock price. And the market cap goes up more. If you look at the start of the Bitcoin era at MicroStrategy till now, the market cap has doubled the share price because of the quote unquote dilution, and it creates more shares. I could probably explain that better, but did I get all the numbers right? The 47, 1,000, 20 years. I mean, that seems bearish to me.
I would add that I I'm not even. I'm including 0% yield on that chart. So if you add that, it's just gonna explode, right? So I was trying to be extremely conservative.
Just one thing really quickly, Ryan. So one thing that people should also understand. So the other benefit of this dilution, quote unquote dilution, which I know none of you guys look at it that way because that's not really what it is that increases the market cap. So the more that you guys dilute, the more the market cap goes up, the more you're going to get to, a higher weighting in the indexes. So it actually is beneficial in that standpoint as well. So if I was a shareholder, I would be thrilled about any dilution because, especially when the NAV is higher, right? And I mean, and who knows how high it'll get in the future? No one really knows. But just so people understand, if it ever did get to a 10-1, that would be the equivalent of mining Bitcoin at 7K today. So it's just kind of crazy to think about that. Like any NAV over 3, it's kind of silly how cheap the investors are basically getting Bitcoin for versus the marketplace. That's kind of a very simplistic way to look at it, and that's only looking at it through the one lens. That's not looking at it through the volatility marketplace. That's not looking at it through the banking and all these other things. So yeah, I mean, it's I think it's one of the hardest stocks for people to wrap their head around. I mean, I'm somebody who I pride myself in being pretty good at analyzing things, even though I haven't analyzed like a crazy amount of stocks. Like I know there's something significant here. I think it's just really hard for some people because, like you said, like they're coming at it through the wrong lenses, and until they're able to look at it through the right lens, it's kind of a tough one to wrap your head around. But there's something that's unique here. It's absolutely. You cannot compare this to any product or any ETF. Like comparing this to what was the one last cycle that all the outflows left?
GBTC.
Yeah, it's not even. There's just zero comparison to GBTC. Not even. There's no comparison. If you're saying that, I mean, yeah, I don't. Yeah, it's not. There's nothing comparable.
It's not a closed-end fund. It's an operating company with cash flow and revenue. And an AI for BI platform. I know, Sina, that was one of your questions is, does the software business matter? And, I think it does add value. It has cash flow, but also it's an AI for BI company. And if you don't think that they're using that technology to manage and understand what's going on with, Bitcoin pricing, Bitcoin on chain, understanding the, where dollar flows are operating and how that's moving, I think that's, MicroStrategy has the ability to leverage that technology for themselves as well. Not just sell it to the people; they also have the ability to leverage that technology for themselves.
Okay, guys, I'm doing a difficult job trying to follow all the comments and everything you guys say and blah blah. So sorry if I'm missing some of the messages. But as you were saying, I think it's a great segue to this software side, right? My first look at this was, hey, the software isn't doing well, because I was expecting the any tech company to, first of all, be growing. Second of all, after extreme amount of stimulus after COVID, you wanted to see all these tech sides and anything software essentially, and especially in AI and BI to be growing even more rapidly. But there is a lot of devil in the detail. I want you to comment on that, like how's the health of the software business, and how to kind of not get confused by the numbers on top, right? And then understand the effect of the financial engineering with all the cost that it brings to them, right? And then second, all the positive things about the software business. You guys, as you guys said, there's a lot of brain power in here. They just hired a young Harvard grad, and I'm assuming everyone else in that company is just an overachiever. Michael Saylor himself, MIT rocket scientist, right? It can't get better than that. And the human capital of a software business like this should also add a lot of value. And who knows, just even instead of lending their Bitcoin or generating any sort of yield, they can come up with a business model on top of it, right? They can come up with a network or some sort of application on top of it. So, what are your thoughts, guys?
Yeah, I think there's a lot here. Yeah, the revenue relative to some of the other like top publicly traded entities is small, right? It's incredibly small compared to anybody, Apple, Nvidia, or any of those other companies. But really, the a lot of the value of this company is held is the ability to monetize the stock as the product and offer the convertible debt. So that's kind of the primary value. But the software business, I think this is an interesting component. And if you were to take this a traditional valuation lens and you were to look at the accounting statements, you would be really confused on what's going on here. And a very similar thing happened to Amazon back in the day when they were shoveling all of their cash flows into R&D. So it looked like they were making an operating loss, but in fact, they were building this giant behemoth company. So I think there's a couple things going on. I know that they were shifting their software platform from like a what's it called? Like a
on premises to
on premises. So it was like they're just selling the software to now it's a cloud platform where they're generating monthly income and they're offering it as a service, like a full sales service with the AI BI platform included. And then they've got partnerships with Microsoft and some other big companies that are offering this product. So it's small. It's a relatively small component of the entire business. However, I don't think it prohibits or limits their capability to grow at any point in the future or leverage their financial products. Partly because the convertible debt itself, one, is offered at incredibly low interest rates, far below the existing market rates, like the Fed funds rate or anything like that. And these financial products can be designed and structured in various different formats to fit an investor's appetite. And I think this could be a good segue to jump to slide 29 in this deck, if you don't mind, Sina.
I'll see if I have pulled it.
Yeah. Oh, if not, I can share it.
Go ahead.
Okay, so I'll present my screen here. Share screen.
Can I talk about the software business so you have a second to get set up, Jeff?
Go ahead.
I love the software business. I think it's a hidden treasure. I bonded with it because I'm a business intelligence, quant information analyst. So I just so intrinsically get it versus something like Tesla where there's lithium phosphate chemistry in the batteries and they make the megapacks and they get the nickel and cobalt and lithium. I don't know anything about that stuff. You know what I mean? But I actually understand the concept of BI. I get it. So I have that personal connection, but it's more than that. The software business is not Google. To the last slide of what the numbers are. The numbers are what they are. It's not Google, but I love that it's not Google because if it was Google, the stock price would be 10, 20, 30 times higher than it is now, or MicroStrategy never would have bought Bitcoin. A lot of that had to do with COVID specifically, a la paradigms changed during a time of war. And that was Saylor's war moment. He's I'm going to lose all my employees. I'm going to lose my company, et cetera, et cetera. So it really had to be this situation of a quote unquote struggling business, which by the way, he'll say that. He said that on stages at podcasts. He'll be my stock was dead money. You know what I mean? And he'll unpack how low the volatility was. The options never moved. He'll say these things. So it's the business is not Google, but I think there's a tremendous amount of value in that because when me and Jeff were battling our buddy, Doc Kruger, a mentor of ours, he was leaving the software business for dead. Said it had zero or slightly negative value in his fair model calculation.
Yeah.
So I mean, and I talked about this earlier. Last thing, it's so well entrenched globally. Companies, churches, universities, governments. I just can't see it going anywhere. So as long as it can just keep chugging along, great. Do I want to see the numbers go up? Sure, but as long as it can just hang in there.
Well, and they're going to get a lot more marketing from this, right? I mean, we haven't reached a mania phase where everybody understands what MicroStrategy is as well. And I mean, if you imagine a situation where the company's trading at, let's just say, a 10 times multiple of net asset value, and they raise $5 billion from an ATM, you could spend $10 million of that, a very tiny portion, for R&D, right? That goes a long way for coders that are building out an AI platform or a AI for BI platform. And if you think about it, right, think about the relative scale. So MicroStrategy is holding a $9 billion gain on their balance. They're holding a $9 billion gain on their balance sheet. And you just showed there the revenue from the operating company was 116 million. So the gain that they're holding on their balance sheet is 77 times their total revenue just from the Bitcoin. So you could think about the scale and the relative importance there. It's small, it's important, and helps them service the debt, helps them provide to be able to service debt at some point in the future. And I think it does have ability to scale and grow. Given that everybody's leaning into AI right now, it's better to have it and not need it than need it and not have it.
Do you guys think that MicroStrategy is going to take some of that capital and buy other cash flow businesses? You don't see that happening?
I don't think, yeah, he even said it on the Q3 earnings call. It's like, don't expect us to diversify. Like we're doing our thing. Maybe at some point, a decade or 20 years from now, if companies are just like incredibly distressed and trading at a discount, a material discount, maybe 50% of like their Bitcoin holdings for whatever reason, and they're able to scoop it, he will only do it if it's accretive.
Yeah, I guess my reason for asking it was more to do with
cash flow.
With higher cash flow comes more ability to get borrow more capital to amplify what they're doing. So that would be the only reason to justify it. Just to kind of like put gasoline on the fire. I don't know if that's something that they would ever consider, but
yeah, it's an interesting question, right? But if you look at the performance of these bonds, the convertible debt that they've offered over the last year, it has been the best performing convertible bond in the entire market by like 10 or 15x. It's even outperformed Bitcoin. And so if you think about, he just announced that he's going to offer $5 billion more of these bonds. People are going to be running to the front door. There's going to be a lot of competition on rate. Right, everybody's going to want to put this thing on their balance sheet. In fact, I'm getting phone calls from other companies to put this convertible debt on their balance sheet. So I could see a situation where a lot of this convertible debt could be at a zero coupon bond, where you don't even need capital to service the debt because there's so much competition to gain control of the paper. And
so essentially, the monopoly they have is allowing them to get capital at a place where they don't even need the cash flow. That's
a ridiculous cash.
That shows you the power of monopolies. It's just that's quite absurd. And cost of capital, I mean, is just so important. But it's definitely interesting. I mean, there's just so many questions I could ask. But I want to let I don't know if Svensson, do you have any questions, or Sina? You guys probably.
Wait a second. Where is Danny?
Dan had it. Yeah, he had to jump out.
He's still in college.
To be honest, I'm quite enjoying not having to talk nearly as much as usual, and I feel a bit spoiled. And I'm learning so much. A couple of my questions I have are a little bit not on this exact topic, a bit more open-ended. So maybe I'll save them for a little later in the conversation because I want to keep rolling.
I did want to explain the slide I pulled up a little bit earlier and just walk through this concept because I think this is incredibly unique. Sina, if you don't mind sharing my screen, I think I presented it.
Yes.
Okay. So
can make it larger.
Can I make it larger?
Is that Control L or something? That would full square.
Is this your slide, Jeff?
No, this is from the Q3 Q3 report.
Okay, I've also pulled it up. If you like to use this one.
Oh yeah, let's do that one. That's perfect. Okay, so all right. There's been a little bit of a narrative recently about MicroStrategy as a refinery, and I really like this. I really like this perspective, and this slide is incredible at showing this perspective. So. I just lost it. There we go. So what MicroStrategy is doing is they're offering the ability to transform Bitcoin exposure into a different product with different risk return metrics. Okay. So you can see on the left-hand slide here, you've got Bitcoin, and this transformation, what MicroStrategy is offering with their convertible debt, allows a company that wants to hold convertible debt, it allows them to get Bitcoin exposure where you reduce the upside, but you also reduce the downside. So you can see this arrow going from the left over to the right here. If you just hold spot Bitcoin ETFs, you would get spot Bitcoin exposure. You would get exactly 1-to-1 like what Bitcoin does, up and down 1-to-1. If you hold MicroStrategy equity, if you go up, you see that, there's leveraged exposure. You have potentially more, 1.5 times or more exposure. If you hold a product like MSTX or MSTU, you get even further leveraged exposure. You're getting a 2x multiple of the underlying MicroStrategy equity. And then MicroStrategy options can give you even more leverage on potential Bitcoin exposure. Now, these products can also go the opposite direction. You can, institutional buyers are purchasing these MicroStrategy convertible debt, which can give you something less than 1-to-1 exposure to MicroStrategy. So it's reducing the volatility of the product. So this may appeal to many different capital bases where maybe they don't have the approval to go put Bitcoin on their balance sheet, but they could go buy equity in a company or convertible debt in a company, and they can add convertible debt to their balance sheet. Something that comes to mind, and this is particularly interesting to me in the industry that I work in insurance, the regulatory bodies or the regulatory bodies will not allow you credit. You don't get any credit for holding Bitcoin on your balance sheet. Basically, you're not allowed to lend against it. Now, you can hold equity on your balance sheet, and you can hold convertible debt on your balance sheet, and you can get credit for holding those products on your balance sheet. So all of a sudden, holding a product like this, the MicroStrategy convertible debt, or a MicroStrategy debt product, you have the ability to hold that on your balance sheet and lever against it, basically. So these pools of capital that want exposure to Bitcoin but at a reduced volatility metric are incredibly deep. The total bond market, just think about the total bond market, is about $300 trillion. The total convertible debt market is about $800 billion. So if you're talking about MicroStrategy looking to raise $5 billion of convertible debt, that would be an incredibly small portion of the total debt market and an incredibly small portion of the total convertible debt market. So their ability to facilitate this type of product, there's significant headroom to continue to grow the convertible debt market for MicroStrategy, which is offering this Bitcoin exposure at a reduced volatility. It's a complex topic. It's a complex topic, but they're monetizing the stock, right? Like the fact that Saylor is incredibly transparent with what he's going to do. If you buy this product, if you give Saylor $1 billion, he's going to take that $1 billion and he's going to buy Bitcoin with it. And that increases the underlying value of the equity. And as an equity holder, the benefit that you get as an equity holder is that you get the benefit of the excess volatility that the convertible debt holder doesn't want to hold, right? So that chopped off volatility that the convertible debt holder doesn't want to hold, the equity holder then gets that volatility exposure, basically upside and downside. So that's what leads MicroStrategy equity to be a little bit of a levered product. And the next slide, if you go down to the next slide, which is the 30, it just shows, yes, this one, perfect. And this is, this is oil refining. This is comparing MicroStrategy to an oil refinery, right? Like if you just take crude oil, there are many things that you could do to crude oil, and you could talk about the most refined being jet fuel up at the top, and the least refined being bitumen or asphalt down at the bottom. And there's all of these different products that you can make in between. So MicroStrategy is just taking the same framework and transforming this capital into different forms that different capital markets want exposure to.
I want to say this also tells me how incredibly skilled Michael Saylor and MicroStrategy are in building the narrative and explaining the ideas in a simple way that will resonate and will, build on the narrative that's just increasing and improving. So this is another thing that's very interesting. Like these guys are very creative. They know how to talk to the investors. They know how to explain the value of what they're doing.
Yeah, I think this is spot on. Like, I think the best lens of looking at Bitcoin through is a digital commodity, and I do think that's one of the reasons why it's had this kind of like floor price. It's followed really well. Is this whole idea that Bitcoin, the probability of Bitcoin trading below its production costs is extremely low, which commodities don't normally trade below their production costs. So all these analogies kind of come together and they make a lot of sense. And I really like this. Actually, I haven't seen this slide, but I need to go back and watch all this stuff, because this is it's a great way to explain what they're really doing, because they're taking the digital commodity of the future and then they're having a monopoly on essentially all these ways of refining it, you could say, right? So I like this. I think hopefully it helps people, because it helps me.
It's a genius analogy. I come from some oil and gas background myself, and some chemistry, and I'm very well aware that the modern, the 20th, 21st century society that we have been that society has been based on has been petroleum, has been the petrodollar. Essentially, it's an oil-based economy. Everything that we have, that we make, all of our secondary commodities, all of our pharmaceuticals, our transportation system, fuel systems, they're really based on petrol. So, and since this is digital energy conserved, which and it's both an analogy and not in some ways. I think this is a key to driving forward the narrative. So yeah, I agree. I think Saylor really extended what was an analogy and took it to a new level here. I love this. And you can see how you're diversifying into a new Bitcoin-based economy in the same way that petroleum did for us.
Right. And there are so many pools of capital that want access to Bitcoin, but maybe not, spot exposure, right? Like a lot of people can't handle the volatility, but they want some exposure to it because they know that they should, or they subscribe to Markowitz modern portfolio theory, right? If for those that are unaware of Markowitz modern portfolio theory, it's basically the mathematics behind diversification. And the mathematics behind diversification is if you add a new asset to your portfolio, a diversified pool of assets that has different risk return metrics, you can increase the return and reduce the risk of your entire portfolio. And basically any diversified fund across the globe subscribes to Markowitz modern portfolio theory, and having greater than zero exposure to Bitcoin is valuable. And I think we're at a point now where these financial institutions need to start thinking about this and start looking at it and thinking about adding these assets to their balance sheet. And it's only just started. Most of the traditional financial world, I could say with confidence, doesn't know this exists, or they know of Bitcoin. All they know of Bitcoin is FTX. They're nervous about it. They think it's fake. They get nervous about looking at the compound annual growth rate. And I think there's a long way to go in bringing the traditional financial world into the scene.
So sorry, quick question. How do ETF options affect any of this? Because I like it just because someone might be asking this in the audience.
Yeah. Go ahead, Ryan.
Yeah, I would say number one, they don't. This is kind of part of my broader thesis that like it's over. You know what I mean? The cat's out of the bag as far as the thesis is concerned. We can see that through a number of different media channels. Dylan LeClaire's on Fox News. I mean, this stuff is getting out. And to the extent that people like wanted to place their bets, they already have. And I can see that. And if we want to talk about this in a little bit, I'll find the Excel file or try and recover it because I lost all my Excel files. But I'll show my stuff on the call skew. I mean, it is magnificent numbers with, 50% out of the money, equidistant calls and puts. The calls cost 5 or 6x more than what the puts cost. I mean, it's just so remarkable. And I don't see that. Well, here's what I should say. I have no idea what's going to happen in the future, but I just cannot imagine that demand for MicroStrategy call options to be diminished, right? Because I can use myself as an example. I obviously don't speak for the market, but like I have no interest in, I never had interest in ever buying IBIT. I definitely don't want the options. And I just think that we have such a lead here in the way that MicroStrategy has such a lead on everyone else in like their Bitcoin holdings. We have use that same concept. We have a lead in the options market because we were the only game in town for so long, and the stories become so much more and more and more and more popular. So if anything, here's where it gets funny. If anything, I think IBIT options will just disproportionately benefit MicroStrategy in the exact way that the IBIT spot equity disproportionately benefited MicroStrategy.
Yeah, and it's not like it has to like, and it's some of these like it can be for different investors and things, and I mean, and also it's just such a massive pie. Like it's not like you have to take 100% or whatever. It's just, you know, you can get a decent sized percentage of that massive pie that's going to exist in the future. It's still you know, it's not like it's all or nothing kind of thing, and more competition. It's kind of competition. You can look at it in that way or not, but it actually can drive, you know, industries more. So I think it just brings more attention to the concept, and it's probably net. It's hard to say, but it's not going to be like a massive negative, I guess is how I see it.
Yeah, I don't see this happening like the January approval of the ETF, where MicroStrategy dropped relative to the price of Bitcoin. I think it's almost the opposite, because options buyers want volatility. And if you compare the volatility of MicroStrategy to Bitcoin, the volatility of MicroStrategy is, I don't know, 150, and the volatility of Bitcoin is 100. As an options buyer or an options seller, you want to be in the most volatile asset, because that's how leveraged and disproportionate gains are made.
Can you guys speak to some of the volume we're seeing for MicroStrategy? Like it's pretty. I saw a chart the other day. Maybe I'm sure you guys know it off the top of your head, but like, what's the like how much volume is MicroStrategy getting compared to some of the biggest stocks in the world? Because it was quite remarkable to see, like how they're in the top, like they're up there. They're in the top 5 or 10, aren't they? Like it's
Yeah, for options volume, certainly. I think I post the daily market cap update on my Twitter profile at Punter Jeff, and then somebody also posts, you know, where they lie on options volume for the day. And I think over the last couple of weeks, MicroStrategy has been in the top 10, top 20 options volume of all publicly traded equities. I mean, they're up there. Yeah, there you go. This slide outlines it. Yeah, MicroStrategy open interest, option open interest, upper left-hand corner, sixth largest open interest. And if you think about it as the daily traded volume as a percentage of market cap, looking at the bottom right-hand corner, it significantly outweighs every other company in the entire market, S&P 500. It's pretty incredible, honestly.
Ryan?
I mean, that's I was actually, I have this screenshot of, if you can see my screen over here. I've just been staring at this screen. I take screenshots during all the conference calls to get my notes together, and I mean, that tells the story. There it is. I mean, this is the highest daily traded volume as a percentage of market cap in the stock market. Like, this is the hottest stock in the universe, as Saylor said, you know?
And it will continue to be the hottest stock in the universe. Oh my God. Can you imagine? So I think somebody brought up the word mania earlier, and we haven't, while it's been incredibly volatile right now, we haven't experienced anything. I think this could get really crazy over the next 12 months. If the price of MicroStrategy and Bitcoin are in the irresponsibly long dip. This is kind of where I'm going with this. If MicroStrategy and Bitcoin are in price discovery at the same time, I think we could see some serious fireworks. And I use this as perspective. GameStop. I was involved in the GameStop trade back in 2021. Wall Street Bets, which is a subreddit, had 600,000 members in Wall Street Bets, and within a week, that number of people within Wall Street Bets went from 600,000 to 10 million. And that was the type of mania that we saw with GameStop. And I think we could see something very similar happen with MicroStrategy. However, with MicroStrategy, you actually own the strongest financial company in the entire world if you believe in Bitcoin. So it's a fundamentally different situation. And there's this community on X. It's called Irresponsibly Long MSTR, and we've been using this community as a gauge of the social aspect here. And Irresponsibly Long MSTR has gone from, I think within just the last month, it's doubled the number of followers. It's gone from 5,000 to now it's over 10,000. It's growing over 100 a day. But I could see a situation where we get into a mania phase if Bitcoin goes into price discovery, and we can see that number of the irresponsibly long community go up to 100,000, 200,000, 500,000, and that starts to blow mNAV out of the water, right? Like you can get to really irrational market cap values really quickly, especially if you start to compound, inclusion into QQQ, MSCI rebalance, the January 17th open interest expiration, which I think is pretty monumental, and other future catalysts in 2025. FASB, interest rates continuing to come down.
That's a wonderful segue again. I want us to definitely comment on the future catalyst. We talked a little bit about the S&P inclusion, other indexes, the FASB accounting rules, the reflexivity that's going to happen, everything that you said with the social aspect and the community. Maybe if anything else left, I think we didn't talk enough about FASB. Or anyone else, anything else you want to cover?
Yeah, I mean,
also
go ahead.
Yeah, I kind of had. I don't know if this is a good segue or not, but I did have an open-ended question. I think this is pretty related. I mean, Ryan mentioning the cat's out of the bag with MicroStrategy. Given my question basically is, how do both Jeff and Ryan, how do you guys think about? It's hard to talk about MicroStrategy's future price performance without kind of going back and discussing the fundamentals of why I believe the continued appreciation of Bitcoin itself will happen, right? Fundamentally, everything it's a Bitcoin strategy. And so my question here is, how do you guys, if at all, do you think about sort of the continued adoption of Bitcoin and MicroStrategy's role for equity investors? Is it a driver of it? Is another vehicle or a catalyst to ride up these bubbles where the premium expands? And it kind of is it a further mass adoption driver? And is that even do you guys believe that fundamentally that's going to be necessary the way that it has been so far? It's been like sort of addresses to the power of 2 roughly over this point. Is that still going to matter as much going forward with a vehicle like MicroStrategy? Some people were wondering some along similar lines with the ETFs, and I think the jury's still out on that. But what do you guys think generally about that?
Yeah, I think this will massively impact global adoption of Bitcoin, particularly because you have these agnostic buyers that are supporting the value of the stock, right? You've got these passive market cap weighted index funds that are supporting the value of the stock. So that's going to get people this exposure without even knowing that they have this exposure, and which is going to bring more capital into the Bitcoin ecosystem. Which is going to incentivize more continued development of the Bitcoin ecosystem, right? If Bitcoin goes from 1.4 trillion market cap to 10 trillion market cap, all of a sudden there are a couple 100,000 people that have just been freed up from their existing roles and jobs and things that they're working on, and are going to start devoting their time and effort and energy into developing the Bitcoin ecosystem. A lot of people talk about retiring, but I think everybody's lying, right? Like you're definitely going to want to do something. And I think a lot of people are going to want to work on Bitcoin into the future. I think
I agree with you. It seems like the more the machine works, the more there's going to be an incentive to join. There's going to be feedback loops that build here, right? Yeah, and I agree with what you're saying. Yeah. And
I also think about a tokenized future, which is an interesting concept. And this is already kind of happening with MicroStrategy. There's this product that's available in Europe, and it's started by Blockstream, Stoker, Adam Back's company. It's called CMSTR. And this is actually a tokenized MicroStrategy product that's tradable peer-to-peer. And I can foresee a future where you now have stocks that have utility value, like MicroStrategy, where you don't necessarily have to sell your MicroStrategy in order for it to have utility, where you can hold a product like CMSTR in a cold storage wallet and send it peer to peer, right? If Ryan goes and buys dinner and I want to pay him back, he accepts CMSTR from me. I could send him a couple, CMSTR pieces. It's like infinitely divisible and usable, similar to how Bitcoin is used. So I know that's a concept that a lot of people get stuck up on, is like a Bitcoin denominated future, and will MicroStrategy trade as a multiple in a Bitcoin denominated future? And I think the answer to that is absolutely. There will be other things that have value in the world aside from Bitcoin in a Bitcoin denominated future. Bitcoin will just be the measuring stick by which everything is measured. Homes, commodities, gold, oil, stocks, equities, all of those things will continue to hold value at some point in the future. It will just be measured against Bitcoin. And I think those things will be valued at multiples, because not all of those commodities are available to the market at the same time, right? People will hold homes because they have utility value. People will hold equity because they have utility value. People will hold commodity because it has utility value. And I think that's a tough concept for people to wrap their heads around. There might be 21 million Bitcoin in the world, but there might be 210 million Bitcoin worth of value in the world, and market cap itself is a synthetic concept, and I think that's hard for people to grasp.
Yeah, I mean, Bitcoin can easily compare, because you can with on-chain data, you can very easily look at realized cap versus market cap, and very rarely are they anywhere the same with Bitcoin. Like Bitcoin is always trading, at a multiple, its own NAV from the realized like money input versus its own market cap. Like Bitcoin has its own NAV because during right now, I think it's at 2.1. So basically the market cap of Bitcoin is trading at over a double of the actual realized dollars that have gone into Bitcoin throughout its history. And the only time it really goes back to being at a neutral is at the bottoms of the bear market. It actually goes a little bit below, similar to how MicroStrategy went below its NAV. It's actually somewhat of an analogous comparison in some ways. But I guess just because today's election day, I don't know if this question, you guys can choose to answer it any way you want, but do you see any differences? I guess how do you kind of wrap your head around this kind of fork in the road, so to speak? I'm not to get political. I don't want to do that. I want to just we could talk about the bullish case. If one outcome with strategic reserves, or just that concept. We don't even have to talk about specific candidates, but just the concept of strategic reserves. If the U.S. were ever to go that direction, and how that could impact like MicroStrategy as a stock.
Go ahead, Ryan, take it.
Can I go first? And I'll start by answering the previous question, and then I'll touch on this too. And I won't share my political beliefs, just kind of knocked my fan over, just kind of the bull case, bear case, each side. So in regards to the first question, I mean, I think all the Bitcoin's gone. I feel like all of it has a future buyer, and the price today in the short term is just very meaningless. I talked about this with Tim Kotzman, but think about who the buyer would be if anyone is to sell their Bitcoin. You've got, Metaplanet buying as much as they can, Semler buying as much as they can, El Salvador aggressively buying, the ETF owners buying more shares of the ETF, which buys more Bitcoin. The candidate in Suriname, Miss Maya Prabhu, if she gets elected, she's going to be buying Bitcoin. So there's like a global story here to be made about smaller entities. I shouldn't have thrown IBIT in the smaller group, but you know what I mean. And then in the big money center of the world, you've got the whole ETF complex, just net buyers for a long period of time. And then MicroStrategy came out and said, we're buying $42 billion worth of this thing over the next 36 months. And again, to Jeff's point, he brought this up earlier, that just gives everyone else the ability to front run. I love the work you guys do, though. Here's where I want to give you guys a genuine compliment. You guys lose me in some of the more hardcore mathematics. And I even told this to Giovanni at Bitcoin First. I was like, you've forgotten more about the hardcore maths than I've ever learned. So I'm trying to like learn more. I can keep up with you on like the T to the 2, T to the 6, but then once you start putting like symbols in there, I get lost. But that's how I look at it though. Like the information, the buyers, the catalysts, and then do like business fundamental quant stuff, like Excel, math, Python, all that kind of stuff. But now pivoting to question number 2 here. I think it's clearly much more bullish one direction. If the orange man wins, then that's a prosperous sign for Bitcoin and the broader crypto community, even though I like cringe when saying that. But it would be bringing Bobby Kennedy Jr. in, who's talked about a strategic reserve, and bringing one key person in who I won't even bother saying his name, but to perhaps help him with that. It's not Saylor. And Senator Cynthia Lummis talking about, proposing legislation for a strategic, reserve. I almost said petroleum reserve, but a strategic Bitcoin reserve. And then, what else? It would kind of be like the quasi, like it would be the end of Gary Gensler. He might be gone either way, but it would confirm that. And it would also be the end of like the Elizabeth Warren, like, anti-crypto army, whatever she called that thing. It would just be another like loss on her record sheet to further like diminish her opinion. I think the opposite of the other way around. And again, I don't even care about my own political views, but I think if Kamala wins, which by the way, the evidence, and we'll get into that, like maybe I'll share screens of like the live like betting markets and we'll go through that. But for Kamala, I think there is a bear case to be made because it's kind of like the victory for the Genslers and the Elizabeth Warrens of the world. And they have no real incentive in being hot and being pro crypto. I mean, we had Tim Walz at a rally being like, I don't even know what a venture capitalist is. It's like, yeah, man, you don't know what anything is. You've never owned assets in your whole life. So they're not going to, again, it just is what it is. They're not going to ever appeal to like the Bitcoin crowd. They're going to be like, if anything, they're going to be the anti-Bitcoin crowd. They're like the Greenpeace USA propaganda campaign. Like that is like the Democratic Party's view. The Republicans, again, I'm not picking a side here, but they are like much more open to it. And they understand the idea of an immovable minority. This is a Nassim Taleb concept, and I know other people have talked about this, but when you have a small, immovable minority, and he used like the reference of like taking the gluten out of like lemonade, there was a small, immovable minority that like demanded gluten be like removed from lemonade, and slowly but surely over time, all the gluten's out of the lemonade because the much bigger majority just didn't care. So you just appease to the smaller minority, and then like that's how you can flip a population. So let me just pause there.
Fantastic. Yeah, I think Bitcoin is fundamentally, philosophically, and economically benefits from a free market mindset, right? It's doing its job. It only needs people to just leave it alone, and even if they don't, it's gonna chug along. But it matches a lot more with a mindset and philosophy that supports free market. So anyone who just wants to come in and add some limitations, red tape, laws, regulations, all that is just not supportive of the ecosystem. The best support for Bitcoin is just leave it alone, let the market do its thing. This is the best asset in the world, and we just need to let the economics play out. Guys, the other thing is my good friend Crypto Wizard is also with us. He's a Glassnode analyst, and he's been reminding us that we need to talk about the bear case as well. In the beginning, right before the call starts, I was talking to Ryan, to Jeff, and saying, hey, I was trying to like bring a balanced set of questions, like 10 bullish, 10 bearish. But then like, as I studied more, like I just got rid of them, right? It just doesn't make sense. But we need to think about that as well, right? Actually, we need to knock out, or at least think about the possibilities of this trade going wrong, all sorts of the risks that might be present. I'm as a Bitcoiner, I'm very skeptical of any kind of centralization, right? We have Michael Saylor, any huge influential person is positive, but also a part of me also thinks there is some kind of risk there. Then everything that might go wrong with the leverage they're taking, or what are the assumptions? Essentially, what are the assumptions that we are taking here in all the analysis that we've said that might not pan out?
Yeah, I mean, if you go look at the 10K, the MicroStrategy 10K, it outlines every possible risk, and it's going as crazy as into trying to rationalize black swans, and there's tons of detail in there. So if you're really concerned, you can go look at the MicroStrategy 10K, and that will give you some perspective. A few big ones that come to my mind are unrealized capital gains tax. If for whatever reason politically we got into a situation where everybody thought it was a good idea to do unrealized capital gains tax, I mean, that would be a nightmare for all capital markets, not just MicroStrategy or Bitcoin holders. It would likely destroy value in the capital markets. So when you think about the downsides, it's helpful to think about the game theory of many of these situations and where the incentives lie for all parties in each one of the potential downsides. Unrealized capital gains, that's one of those that it could happen. The likelihood and probability is incredibly low. I think that's probably even black swan. You've got custody risk, right? You've got third-party custody risk. I know MicroStrategy has their Bitcoin in custody with a few custodians, that being Coinbase, Fidelity, and I think a couple others. Where this can get where the risk of custody can be reduced is thinking about SAB 121, which was a bipartisan bill that was passed recently in this last year, and then vetoed by President Biden, which allowed banks to custody Bitcoin. If banks are allowed to custody Bitcoin, then the custody risk starts to get spread out across many different institutional players as well. And if you start to think about custodying your Bitcoin with a company like Chase Bank, JP Morgan Chase, you are now plugged into a systemically large, too big to fail financial institution, which changes the dynamics of that risk vector as well. So, I mean, you can get as crazy as into like global EMP, right? If there's a global EMP for whatever reason, we've got bigger issues. You better have enough guns and fresh water to protect yourself, and probably we're not worried about our Bitcoin anymore. Even then, in that situation, you have satellites in space that have the Bitcoin ledger thanks to Blockstream. So we even have backup nodes from that perspective as well. So, I mean, it's helpful to think about the risks, not being able to service the debt at some point in the future. But as you can go look at their financials, right? They've got 4 times as many assets as they do debt. So they're under leveraged in my opinion. It's equivalent to taking out a 25% loan on your house as opposed to like an 80 or 90% loan. So they're under leveraged from a financial perspective compared to like FTX. FTX had $10 billion of liabilities and $9 billion of assets. They were underwater. They were bankrupt. So it's helpful to kind of monitor financial leverage. I think that's helpful. They're operating within a confident framework. And yeah, it's to your point, Sina, you start to go through these bear cases and you start to think through them, and it's easy to kind of like tick them off in your head. I mean, they're always probabilities, but most of the probabilities are incredibly low.
Yeah, it's interesting because there's not really that many that are different as far as Bitcoin and MicroStrategy, as far as like the really, really big kind of doomsday scenarios. I mean, there's a lot of overlap there. There's a couple that are, maybe not overlapping just because of the nature of the difference between, cold storage versus MicroStrategy. But I mean, they're pretty minor, all things considered, as far as differences. And I mean, I think I've done some of the math on it, and a couple quick points, like just so people understand, there's absolutely zero. It would be impossible for any miner to ever catch MicroStrategy. I worked out like how many Bitcoin are coming, how many are available because of the halving every 4 years. Like in order for a Bitcoin miner to catch MicroStrategy, they would have to be subsidized by a government so that they have almost like no cost, and they would have to be mining like 80 to 90% of the network like every year. And so it's just not going to happen, because in order for that to happen, it would be an existential threat to the network itself, and no miner would be able to, the network's not going to allow a miner to go over 50% like hash. So it's just there's no scenario where any miner is ever going to catch MicroStrategy, so that's not even a concern for you guys. But I would say, yeah, I mean, as far as these risks. Okay, so a lot of it again goes back to the price would have to tank to a degree that would absolutely shadow the power law. So if anyone's watches and believes in the power law, not to say you should have like your faith in one thing, and we could go below the bottom of the power law, like that can always happen. But there's a cost of production thing, and there's a mathematical probabilities to get pretty damn low when you look at the history of Bitcoin and the patterns we followed. And yes, we would have to go to unprecedented levels. So it would take a catastrophic black swan, I think, to kind of put the price in any levels where it would start to put you guys in some serious stressful situations. And then there's always the possibility of raising money in various ways to kind of patch over things, because these are short-term events. Again, if it's longer term, then Bitcoin's basically, the way I look at it is, in order to cause some of these things, Bitcoin's done anyways. so it's kind of like at a certain point you got to say, okay, well, there's a risk to, like, it's this risk to reward profile. There's always risk. You're never going to eliminate risk 100%, right? There's always a risk.
Right.
So could Bitcoin go to $1,000? Yes, it could. If that happens, yeah, okay, MicroStrategy is in trouble, but so was every Bitcoin holder. Bitcoin's probably done as an asset class. So does it matter at that point? Not really. So that's how we look at it. It's like, if you have a level of faith in Bitcoin as a Bitcoin holder, the risks are kind of similar to MicroStrategy's risks at this point. So then the last thing I'll mention on that is, the last thing I want to say, and then I'll let you guys talk for a while, is just simply, MicroStrategy holders are allies to Bitcoin holders. I don't hold MicroStrategy, but I'm absolutely cheering for MicroStrategy. And the reason why is because I do indirectly benefit the higher the NAV goes as a Bitcoin holder. And we talked about this on a previous show. The more that MicroStrategy is able to buy Bitcoin because the NAV is higher at a better cost basis, and get, basically they're able to, because the NAV is higher, they're getting essentially a lower price point on their Bitcoin indirectly. That benefits Bitcoin holders. It really does. The amount of buy power, given the amount of Bitcoin available, like if MicroStrategy is able to fulfill this 42 billion, and if MicroStrategy is able to get to like 1 million Bitcoin, that's going to benefit every Bitcoin holder. It's that simple. And if MicroStrategy becomes a multi-trillion-dollar company in the S&P 500, over the next 20 years, that absolutely benefits every Bitcoin holder. So that's just, I mean, I don't know why there's any division or any camps in this, because we should be cheering for each other in every capacity. That's how I look at it.
100% agree. I mean, you hit the nail on the head. on all things. One, if the primary risk vector for MicroStrategy is something happens to Bitcoin. If something happens to Bitcoin, then every party on this call is done.
Or I would say I actually would be happy if Bitcoin crashes by 50%, 30%. MicroStrategy is going to get decimated. The multiple is going to come down. It's going to correct faster. But guess what?
So we're cheering for Kamala so that we can buy MicroStrategy? Is that
no? I agree with Tina, but I no on the Kamala.
Here's the thing with that I think all too often gets overlooked. By the way, thank you for saying what you said, Clancy. I agree with you 100%. But it's like, people keep coming back to like, oh, if there's a bear market, or if there's just like a flash crash sell-off, which, by the way, gentlemen, this August 4th, I believe, was something of a mini little flash crash. The VIX went from 18 to 65 over the weekend. That was something. So in an event like that, a flash crash, or like a typical cyclical bear market, right? If MicroStrategy goes up a lot and then gets cut in half 50%, or 60%, or more than whatever, like Bitcoin goes down, the absolute returns might still be noticeably higher on MicroStrategy. So that's and I'm not saying that Doxina was suggesting that, I've just heard this a million times. And that's why I came off a little hostile at the beginning, because it's like we've been saying these same words for like a full year now, ever since we did Quampros. And like nobody was like, not only were most people, you guys are willing to do the work. Most people are they're not willing to read 10Ks like Jeff was talking about. They're not even willing to read our stuff, but they rush to Twitter to be like, what if MicroStrategy goes down? Well, what if it goes up so much that the drawdown doesn't matter?
Ryan, I mean, we are intimately familiar with all this. We've been also, as you guys have been in the trenches defending Bitcoin against all these kind of doomsdays. I still answer the quantum computer question. Like, I still answer, what if the government, like, I remember 4 or 5 years ago, this was the number one thing that everyone would ask on our spaces and our online discussions. Exactly remember, like, I've probably answered this like 20 times on Clubhouse. What if government bans it? And I'm glad, like, after several years of repeating the same damn thing about game theory and the government not being a monolith and the competition between other countries and so on, we are now past that, right? So these things, don't count on these things going away, right?
They're not. We're going to be talking about NAV for a decade. It's going to be a thing, unfortunately.
I'm interested to see this bull run. I am interested to see this bull run because there is this retail investor that's always looking for, like, obviously the spread of information, memes, and things like this. Like, I mean, exciting new things. Like also the unit bias is another one, right? I mean, with Bitcoin, there's this, like, obviously, like, for people to understand it, there's no difference. You can buy a fraction of a Bitcoin, like that's very clear. But there is this unit difference, and I mean that's. The stock split was very smart for MicroStrategy, obviously, to bring down, that you can buy more shares, right? So the difference with a retail investor, I mean, just the fact that you can get in and out so easily with MicroStrategy in so many different ways, and the unit bias component, and the memeability, right? It's like it's all these memes and spread of information on social media. So it'll be interesting to see. I hope it's nice to see. I guess it's nice to see these memes around things that have long-term sustainability versus short-term, because there's so much gambling in the short-term mindset with these meme coins right now within crypto, and it's just unfortunate because this is so much capital that if it was able to have just a little bit of a longer-term mindset, like instead of having months, a mindset of months, if they could expand that to just like 5-10 years. There's so much return still left in something like a MicroStrategy or a Bitcoin, but I mean, yeah, it's just unfortunate because it's a lot of capital that could be flowing into like MicroStrategy instead of these meme coins. It's
yeah. I think a lot of future meme coin capital can flow into MicroStrategy this year. We may not see the altcoin season that everybody is predicting, Raul. And maybe you should. It's worth considering other horses in the race. and
Caspa fanatics.
Yes, exactly. And
Here we go.
There was a good question that was asking about like preventing a bear market, and I think there is a potential here. But we've got new capital on the scene for Bitcoin. We've got ETF availability, so the fact that you've got a different buyer that can buy the ETF. And also you have MicroStrategy with the ability to leverage capital markets. So if you think about the last bear market, right, MicroStrategy was in a much different position. They were underwater on their Bitcoin holdings compared to their purchase price. Now, fast forward to, let's say 2026, 2027, and let's say they're in a significantly, like very strong financial position. And that's a very different MicroStrategy, right? Like that's a powerful entity that's able to lean into a bear market and purchase based on their financial strength. So I could foresee a situation where if you manage the net asset value, you manage your ATM appropriately, you manage your convertible debt appropriately, you've got long-term covenants on your convertible debt, all of a sudden you have a company buying billions of dollars of Bitcoin in a bear market that didn't exist in previous bear markets. And it's very transparent and the rest of the market knows it. We may not see the same bear markets drawdowns that we've seen in the past. So if you're waiting to buy MicroStrategy in a drawdown, there's max pain is that there is no drawdown, and that is yes, but that's a possibility, and we will always see volatility, right? Bitcoin will be volatile because it is a finite asset, and everything's traded at the margin. But in terms of total drawdown, the future could look a lot different.
Yeah,
in terms like these. Go ahead.
No, go ahead, Spencer. You go ahead.
No, I was just going to say that sounds like a pretty astute take, and there's always going to be risk, right? And the BTC relationship here to MicroStrategy's leveraged accumulation strategy here is relatively young still, but I think that the upside is still so huge, like you said. Not financial advice at all, but somebody, in my position might take more of a DCA type of strategy. If not go a little bit harder, because I think we still have a long ways to go if you look at where we are with the Bitcoin cycle itself. So I can see a little bit of both sides. So maybe taking a measured approach, but getting in somehow, I would definitely agree with.
Yeah, I just want to say a couple really quick things. I think as far as this whole idea of an extended bull run or a muted bear market, I'm actually doing a space with Fred about this on Thursday. I mean, it's quite interesting because there's always been this discount every bear market, I think, where there is like the real, at least the fear of Bitcoin actually going to zero. Like every bear market in the past, like especially early on, we're talking like 2014, 2018. I think there was a percentage of people that during the absolute max fear of the bear market, when Bitcoin's just dropping like a rock, there was this realistic, not for people that have been in longer term, but there was a decent amount of retail that was just completely capitulating because they actually thought this thing could go to zero. I just don't think there's that risk. That risk is going to be there this coming supposed bear market. And of course, there's like been this liquidity cycle, right? There's been this liquidity cycle that's been like clockwork, and Bitcoin is kind of tied to this liquidity cycle. I think it's the main driver. I don't think the halving is really the main driver. I think it's the liquidity cycle. So, okay, if we continue with the liquidity cycle, that's a headwind. That's a massive headwind. The question is, are there going to be enough combined tailwinds to mute the bear market or change the pattern that we've seen? We've seen this very, very cyclical 4-year pattern. Now, my base case is still that we probably see this to some extent, just because liquidity. I mean, if we follow the cycle, it's a lot of headwind. However, MicroStrategy could be adding to the thesis that, or is adding to the thesis, and could continue to add to this thesis of if we accumulate enough combined tailwinds, could we potentially extend the bull run or mute the bear market? And it's interesting to think about. Will there be a point where we see something where it's more of like up with these long correctional periods of like a year or 8 months, like we just saw, where we build a strong enough base to actually continue higher despite potentially the liquidity headwinds?
It's going up forever, Plan C. Like
I know it's going up. It's just
buyers are coming, man.
Yeah. I guess what I'm trying to say is I think the people waiting on this like 70 to 80% like predictable 4-year correction could be disappointed this time. I do think there's a really realistic probability that the correction is 40 to 50%, or we even have an extended bull run. I think it is possible. I'm not ruling it out as a possibility. I think everyone is thinking, okay, like Bitcoin's so predictable. It's 4 years. We dropped 70, 80%. Okay, I'm just going to buy back in next bear market. I missed the boat this bull run. I don't know if that's like a sure thing anymore.
Yeah, I mean, part of this comes down to also money supply and inflation, right? If we get into 26 and 27 and inflation is an issue again, flight to quality and inflation-proof assets will be much more at the forefront of people's thinking as opposed to at the back end. So yeah, it's a great game theory concept. There's a lot of politics, a lot of corporate game theory, liquidity. A lot of things going on there.
Yeah, we should know a lot more even by the end of this week. The possibility of that sort of thing playing out I think it will depend somewhat on the election stuff. But But yeah, I should let you guys talk, and then we should probably let these guys go at some point.
Well, I got to roll.
Yeah, you got to go. Okay.
Yeah, I got to roll.
I'll stay. I don't care.
Who sleeps during the bear market?
You guys, so let's do this. I think we haven't covered everything I wanted, but we have covered an immense amount. It was like what you guys offered is a masterclass on the stock, and I think again, kudos to you for doing this like months back, and I'm just kicking myself not finding out earlier. I remember just seeing in my feed there's this quant bros thing, and I wrote that comment. I remember that I said I'm instantly dragged into this. Like anyone that calls themselves quant bros, I want to see what they have to say. But then I just got so distracted because I'm just doing like 10 different things at the same time, and it's always like that, right? But so I still think we have a lot other things to talk about, so perhaps we can just come back to this conversation later and talk about many other aspects, especially after we get a new president and there's a whole lot of new macroeconomics and politics that could be added to the conversation. That we still haven't talked about the details of the convertible notes, how they work, the timing, and then also the comparison with others, like everyone else that's trying to follow the same strategy, the Semler Scientific, Meta Planet. And just looking at the institutional holdings data, you also see pension funds are coming into the game, and I just expect this to go on and expand, and like a virus that expands to other ones. Who knows? Maybe next year we'll also hear about nation states competing for this. So a lot of things on the horizon to talk about, but how do you guys want to kind of wrap this up and conclude?
Yeah. Well, absolutely. Thanks for having us. This has been a ton of fun. We love doing these conversations. I think there's going to be, 100 of these in the next. Yeah, there's going to be so many in the next coming months. If you want to follow along and hang out with us, please join us for our MSTR True North conversations. They happen on Wednesday at 7 p.m. Pacific. We also have the Irresponsibly Long community on Twitter. That is a community. You just search Irresponsibly Long. There's also MSTR Den Discord. So if you're up all night and you want to just chat with somebody on Discord, there's people chatting about MSTR like at any hour of the day. It's crazy. And they talk about options. They talk about positions. They talk about doing fun stuff and getting together and things like that. And yeah, and then my Twitter handle's here, Ryan's Ryquant on Twitter as well. And yeah, we're going to be doing more of the same for foreseeable future. There's no second best equity.
The amount of research and work you guys have put into this stuff is just outstanding. It really is coming through. And we need multiple sessions of this. Thank you guys for educating this audience. And for me, this is the amount of notes that I'm getting out of this. So just to have a live session, we need more. Thank you guys.
Absolutely.
Yeah, no closing comments for me. I'll let Jeff run, but yeah, let's do this again.
We should, yeah, absolutely. So I'll reach out and we'll plan another one. Once I give you guys to rest a little bit. This has been a lot of information so far. So I'm sure a lot of people will just have to come back to this video a few times. And by the way, we are streaming on YouTube, which is this is going to be accessible there on our 21st Capital channel, and then on X. X is harder to find later, but you can always just save the YouTube link. And of course, follow the panel. I'm so sad that Danny had to leave early, but we'll probably have him back. Ben, I've just learned that Ben has been putting out fire content, watching some of his content, and it's like, oh my God, I need to have this guy on the panel. But it was too late for planning, and he couldn't manage. But next time, probably have him as well. And yeah.
Hey, Cena, one last thing. Yeah, we will be definitely adding some MicroStrategy models. Like, there's definitely some ideas that I'd like to put together with you guys on just adding to the show weekly, because we pretty much cover Bitcoin primarily. That's all we've been covering essentially. But I would like to, if there are some ways to model, MicroStrategy from a quant perspective, we can look to do that and add that to the show every week as another, because I think there's a decent amount of people that are going to be that hold both assets, right? It's quite an overlap there. So I think people will be interested in some models around MicroStrategy from a quant perspective. Yeah.
MSTRtracker.com. There are a handful of websites where people are tracking some of this data, and it's amazing. A lot of these people are going to the site daily. It's got 500,000 clicks within the last 28 days. So there are a few websites that have some really good up-to-date data, daily data that are fun to follow along on.
Yeah, just to get that raw data and then be able to figure out ways of creating some unique models around it is kind of what I'm looking to do. I think it'd be quite interesting. So
we love data. Yeah. We love data here. And
so,
today also,
guys,
speaking of data, it's a special day in American politics. Happens to be election day. And so Orange Man versus Kamala. Keep an eye. Oh, I was going to share this as a post. So just a little bit of data here for the folks still following really quick. Looking at the correlation between Bitcoin price and sentiment as reported by Polymarket as of July 21st, since Kamala Harris entered the race, July 21st, 2024, there's indeed a sociologically relevant correlation between price and sentiment of the red and blue candidates here. And you can see which is positive, which is negative. With the regression line,
which candidate is better for Bitcoin?
That's Trump is better for Bitcoin. Keep in mind 6 months or 4 to 6 months is a relatively short time horizon for Bitcoin, but this is it's significant, and it so happens that it's a roughly $5,000 per Bitcoin. $5,000 per 10-point move on Donald Trump's sentiment to driving in terms of Bitcoin price increase. So keep following that along and in the coming days, and yeah, do with that information what you will, and have a happy election day, everybody.
All right, so I know you guys have to leave. Want to be respectful of your time. Thanks again. Thanks to Sminston and Plancy. Great additions, great questions. Jeff and Ryan and Danny and everyone else that we couldn't have on the panel. Great job. I look forward to getting more in touch, and hopefully see you more later.
Thanks so much, everybody.
Great. Thank you.
And thanks for
joining, guys.
Appreciate it. Thanks for hosting.
Thanks, guys.
Thanks, Ryan and Jeff. Yeah. Thank you, Danny.
Have a good one, guys. Thanks.